Stocks, ETFs, or crypto? Which one should you be buying? They all sound like great ways to build wealth, but they're not created equal. In this video, I'll break down the pros, the cons, and the risks so you know which one actually fits your financial goals. A stock is like owning a slice of a company. Think Apple, Microsoft, Google, all companies you can buy shares in. If the company grows, your slice grows. Many stocks also pay a dividend. That's just a share of the company's profits, paid out to you for holding the stock. That means you can get passive income on top of price growth. Stocks can deliver huge returns, but here's the risk. If you only own one company or one sector and it struggles, your money takes a hit. Because of that, investing in individual stocks takes more work. You've got to research, follow companies, and bet on who will win long term. Now let's say you want less risk and less work. That's where ETFs come in. An ETF is like a basket of stocks you buy all at once. One of the most popular, the S&P 500. You can buy it through ETFs like VU, IVV, or SPY. That single purchase instantly gives you ownership in 500 of the biggest US companies. ETFs are perfect for beginners because they spread your risk across the whole economy. You won't see the same crazy returns as a winning stock, but you'll get steady growth and a set it and forget it strategy. Now, let's talk about one of the riskiest plays, crypto. Bitcoin especially gets all the attention. Crypto has very little regulation compared to stocks or ETFs. That means massive upside, but also the chance to lose everything. Scams, rug pulls, and volatility are common, but sticking with Bitcoin reduces some of that risk. Bitcoin is a decentralized digital currency. Today, many see it as digital gold, more of a store of value. The upside? Huge. In the last 5 years, Bitcoin's average annual return has been around 60%. The downside? Extreme volatility. It can skyrocket one month and crash the next. Now, let's just go over some common mistakes beginners make when it comes to investing. Going all in on one thing. A lot of beginners hear about the latest hot stock or crypto and dump everything into it. That's gambling, not investing. Diversification exists for a reason. It spreads your risk so one bad bet doesn't wipe you out. Not having a plan. If you don't know why you're investing, you won't know when to sell. Ask yourself, am I investing for the next 6 months, the next 6 years, or retirement? Your time horizon changes what makes sense to buy. Trying to time the market. Everyone thinks they can buy low and sell high. The truth? Even professional investors get this wrong most of the time. For beginners, dollar cost averaging, just consistently putting money in over time, usually beats trying to beat the market. Investing money you can't afford to lose. Especially with crypto, if you're putting in rent money, or money you need in the next 6 months, you're setting yourself up for disaster. Only invest with money you can leave alone for years if needed. Not doing any research. Buying because a friend said so, or because you saw it trending on Reddit is dangerous. Take the time to understand what you're buying, even if it's just the basics of how the ETF or the coin actually works. Avoiding these mistakes won't make you rich overnight, but it will keep you in the game long enough to actually see your money grow. Here's the big picture. Stocks is betting on one company. High reward, high risk, high involvement. ETFs, betting on the whole economy. Lower risk, steady growth. Crypto, betting on a brand new system. Huge upside, but very volatile. If you're just starting out, most people will begin with ETFs for stability, then sprinkle in a few stocks or a small slice of crypto once they're comfortable. If this video helped you, please make sure to drop a like so more people can see it, and subscribe for more simple investing videos. Cheers.